try to make a game plan for your funding round, basically saying what milestones you want to achieve in what time and how much money you need for that. One of the most important factors for success of a startup is the founder market fit. Are you the right team for the right market?
Welcome to another episode of To Be Discussed, our podcast to provide you with first-hand insights for your startup journey. And today we're excited to have another great guest and true expert on fundraising with us. Welcome to the BRYCK Tower, Erdinç Koc.
Thank you for the invitation.
Really happy to have you here. And first of all, let's start with a quick introduction for our viewers. Who are you and what are you doing?
My name is Erdinç. I was raised and born in Duisburg. So I always say in German, ich bin ein Kind aus dem Ruhrgebiet. And currently I'm living in Berlin. I spent the last 8 years in the startup world, worked for different initiatives like a company builder, Rocket Internet, saw what it means to scale your company from 10 people to 160 people in less than 6 months. I used to work for APX, it's the investor of Axel Springer and Porsche, a pretty active pre-seed investor. And currently I'm the head of the Media Tech Hub Accelerator at the Hasso-Plattner Institute, trying to support pre-seed startups from the media tech world. And I'm venture partner at Heartfelt Capital. And this is what I basically do. And I try to support other startup programs around Europe and also other founders with their fundraising. And this is who I am, what I do. Yeah.
Perfect. So wonderful that you came back to the Ruhrgebiet for BRYCK today. So I've read a number in the preparation that you've advised more than 100 early stage startups on fundraising and help them to raise venture capital successfully. So based on this experience, what do all these startups who were successful in raising venture capital, what do they have in common? Are there some key factors that you can say that are most decisive?
It's a big topic, of course. Where I focus is trying to help startups with raising venture capital from business angels or institutional investors, so-called VCs, in the pre-seed round and seed round. And one of the most important factors for success of a startup is, of course, the founder market fit. Are you the right team for the right market? And basically it means, are you able to understand the problem in your customer? Are you able to build the product? Are you able to sell the product? Are you able to do HR and also fundraising? And when it comes to fundraising, I mostly deal with first-time founder. Well-educated people from different sectors, but trying to build the first time a tech company. For them, the first challenge is trying to understand the dynamics of the startup world. And then secondly, if they are going for venture capital, they need to understand the dialect of the investors. And it's pretty hard because on one hand you need to build a company, and on the other hand you learn a new language completely. And one example I can give you is, I have founders on one side, they say, hey Erdinç, last week I reached out to 50 investors. No one responded. And then they start to complain. I don't know why they don't like to talk to me. I don't know why I don't get a response. The feedback's not so good and that. On the other hand, I have founders which are coming to me and say, hey Erdinç, I reached out to 50 investors. No one responded, but I reached out to another 100 investors. And this is a big difference. I have on one hand, one founder who was searching for problems, and the other founder is looking for solutions. And this is the startup game. You need to make the impossible possible, basically. And that's why you need to go beyond your skills and make everything in your power to focus on your fundraising, make it successful.
So what is your advice for founders who are approaching investors? What is the best way to reach out to an investor?
Yeah, I mean, when it comes to that point is, first of all, you need to try to understand, do you qualify for venture capital? And what I mean by that is, what is the big picture of your company? If you want to go for target VCs with a 100 million euro fund, you need to build a unicorn. If you don't have the ambition to build a unicorn, basically mean in a time frame of 10 years, 100 million euro revenue business to become a unicorn, you're not qualifying for the big VCs. And this is, from the beginning, you need to make sure for yourself, do you see yourself in that space? If you say yes, I would recommend first to do a game plan to understand what's the game plan for your funding. Basically mean what milestones you want to achieve and how much time and money you need to achieve these milestones. And then you try to figure out who are the relevant investors for your space. And then you're looking for, if you're looking for funding over $1 million, you can search for investors from not only from Germany, Europe, and also US. Because if you look into the current funding market, and if you look into the funding rounds over $1 million, you see already international investors involved in the funding round. So, go beyond your local environment and search for international investors for your funding round.
Okay. What are there special tools or hacks for founders who are looking for funding that you can recommend?
Yeah. The problem with the funding world is also there's a lack of transparency and it's not fair. So basically saying you can't Google your investors. But the other good thing is you're not the only one who's trying to fundraise. So there are a lot of other founders or other experts who already did the research. So my recommendation is surround yourself as a founder with other founders who already raised a round and ask them, what documents did you use? How did you build relationship to investors? Do you know any investors? Can you do me an intro? And so on. And that's why try to find a sparring partner with another founder who already raised. And of course, there are so many online tools you can use for your funding, but yeah.
We often hear a lot about startups have to have a big vision to change the world, revolutionize things with their products or solutions. Yeah. But is it really true that every startup needs this huge vision, or is it just, are there also examples of successful early stage startups that secured funding with a more modest or niche focused vision? Yeah. Can you tell us something about this?
Of course, both ways are possible, but I always say if you go for venture capital, you need to think big. Because you want to build a unicorn, a startup with a valuation over $1 billion. So you need to think big. And on the other hand, you need to be really good in communication as a founder, because you're selling a future to investors. You sell something that you don't have at the moment. And that's why I always recommend to the founders, to become really good in communication, work on your pitch deck, elevator pitch, one sentence pitch. And you need to convince the investors that my startup could become $1 billion company. And that's why you need to communicate and think big.
Speaking of pitch decks, you have this traditional pitch decks that follow a specific structure. Built like every pitch deck seems to be built in a pretty similar way. But what unique or unexpected elements have you seen added to a pitch that made a lasting impression on investors? Is there anything coming to your mind that you have seen that was really surprising and changed your mind?
Oh, the pitch deck, it's a really important tool for founders to convince investors. And I always say is there are different size pitch decks and pitches for different audience at different times. Basically saying you need to always adapt your pitch and pitch deck to your target investor and to the right format. And there are so many names for pitch decks, but I call them short deck and long deck, basically saying. And I always say try to start to engage with investors who are not that relevant to get into the fundraising mode. So if you have 100 investors in your potential list, start with the less relevant investors to get into the fundraising mode. Because with each interaction with investors, you get better. You adapt on your pitch, you work on your communication, and so on. And one method what I really like is I have teams in my portfolio, when they reach out cold to investors, they send a cold email with the link with the pitch video of them. So they record a video over Loom, and then they do a pitch to the target investor. And this is like not so common in the scene, but they go beyond the most common ways.
Okay. Yeah. Only takes a little more time, of course, but it might be worth it.
Exactly.
So there's a lot of news out there that funding, I mean, we can read it all over the news, that funding has become much more challenging in the last year, but also this year. So how important is it now for startups, even at an early stage already, to have a clear plan how to achieve profitability, how to achieve sales growth? How has it changed compared to the scenario until 2022?
So there's a big discussion in this venture capital world. What is more important, growth or profitability? In my understanding, the typical venture capital investor is looking for growth. So growth bigger than profitability and more important. But in times where you have a lot of investment activities, growth is the most important factor. But in times where the market is hesitated to invest, profitability becomes more important. And you can see it already, like all the investors telling their own portfolio companies, hey, you should focus not on growth at the moment, on profitability, because we don't know whether the market can provide the next funding round for you. So, and on the other hand, in the last 8 years, no founder came to me and said, hey, it's really easy to fundraise. It felt always hard. And what do you want to do as a founder? Okay, it's hard, but you have no other option. You need to go for it. And of course, the market is also pretty hype driven. At the moment, climate tech startups, AI startups, they have the biggest momentum compared to crypto or blockchain or Web3. So you as a founder try to find in that space to target the right investors and go for it. Yeah.
And like we spoke a lot about VC money, but what are alternatives? I mean, not every startup is looking to become the next unicorn, and maybe there are also good alternatives, especially in the funding landscape nowadays. Can you share some insights? What are good alternatives for startups who are not going the VC way?
I think it's a mix of several things. First of all, you can try to bootstrap, so refinance yourself with doing sales, and then you can apply for public funding, or you can look for strategic investors, which are saying, hey, you know what, I understand your space, I'm not looking for the next unicorn, but I'm really interested in your solution also. Maybe we can start a cooperation and I could invest in you and become a strategic partner. And basically targeting business angels who are not looking for the next unicorn. And when we talk about business angels, it's a black box. Everything is possible within that space, because they are individual people, wealthy people, and everyone has a different goal. So I would do a mix of bootstrap, public funding, and strategic investors to avoid the typical venture capital method. Yeah.
Okay. Everyone is talking a lot about impact investing, and that startups also need to have or to prove that they have a positive impact on social impact, or ecological impact. Is it really a big thing, and would you recommend startups to point out this towards investors? Are really investors more and more looking at it, or is it still the traditional criteria like business model, growth strategy that are more relevant to most investors?
In my opinion, you need to have a sustainable business model. So you, on the long term, you can refinance yourself. At the same time, you need to create impact. So you need to work in both ways. And I also believe it's still a niche in the venture capital world, but it becomes more and more important. And you can see it already in the communication within the investor scene. A lot of investors, they have in their investment thesis the impact factor. They put it already in their term sheets when they sign contracts between the startups. The ESG, all the framework. So it becomes more and more important, but it's still a long way to go because you need to change the mindset of a whole scene, and it doesn't happen overnight, I believe.
So you wouldn't advise a startup to focus solely on the impact factor?
Yeah, because the thing is, a lot of investors, when they invest in impact startups, what's their revenue? You know, it's not a pro bono game in the investment in the end. They need to have a return. And the question is, how can I match the return of the expectation of investors? You know, that's the thing. And the whole, as I said, the whole climate tech space has a big momentum. But this whole investor scene need to prove that you can earn money with climate tech investments. You know, and this is we need to have to see it in the next coming years. You know, the big exit case in the climate tech world.
Final question: if you could give early stage startups one piece of advice that goes against the conventional wisdom when it comes to fundraising, what would it be and why? I mean, there's probably a lot of advice out there that everyone says you have to do it this way, and now you can say, no, do it just the other way around.
So I always recommend founders that they should never follow an advice blindly. Even my advice or someone, even the advice from Elon Musk or the big tech entrepreneurs. Because you should always listen to your gut feeling and develop over time a good relationship to your own gut feeling. And that's why I always have a critical thinking as a founder. Does this advice make sense for my startup at the moment? That's the most important thing. And as I said at the beginning, break all the rules of fundraising if it makes sense for your startup. You know, like, don't follow the same path like everyone else. You know, create, as I said, like, as I told you the story at the beginning, I have a founder who signed a business angel right on the street, you know, and this is not written in any fundraising book, I would say. And there are so many examples for that, but this is, I think, one of the hundreds of examples. Yeah.
Do you have another example to share which was really breaking the rules of all the fundraising books and was successful in the end?
Okay. I have, for example, I have a friend of mine who tried to go to a big tech conference to meet investors. But unfortunately, he was so broke he couldn't afford the ticket for the tech conference. And then he signed up as a volunteer for the tech conference. And then he went, and his job was to be on the ticket counter and providing the tickets to all the participants of the event. But his shift was just 2 hours. And after his shift, he printed his own platinum ticket. So he, as a broke founder, had access to the speaker launch of the tech events, you know, to, like, the ticket was a couple €1,000. and he signed it for himself after his shift as a volunteer. And he was sitting to all international big tech investors and founders and networked there. And every time when he got the question, what are you doing, who are you, he told his name, but he said, I can't tell you my startup, I'm in stealth mode at the moment. But this is a way to hack your way into the system to talk to investors.
Okay. I see. Good hint was networking. So how important would you say is networking, being part of a community, building a network for fundraising? Is it an important part?
I think the better your network to the investors, the higher the chance you will raise capital. Because sometimes you will not get access or be aware of investors if you don't have the relevant network. So I always recommend to founders, over time, build a network to the investor scene. That's crucial. And the last couple of years, the venture capital world and startup world was basically communicating over Zoom, Hangouts, and Meets. And now it starts again to meet people in real life. And I was at the Slush event in Helsinki, a big tech conference, and I saw there how important it is to network. And I always recommend to founders, when you go to a big tech conference like Slush, you always see the schedule of the event, where are the parties, where are the satellite events, where are the workshops. But this is the official agenda. But there's also a hidden agenda, a schedule. Usually at big tech conference, you have the big investor VCs. They have their secret parties where you just get invitation when you know the right people. That's why I always recommend founders talk to investors and ask them, to what VC party are you going tonight? And can you take me with you? And then the ratio between founders and investors is not 100 founders, one investor. It's like basically 1-1. You know, do you have then a better opportunity to network with the investors? Yeah.
That's really good to know, especially as part of our team will be at Slush this year. And founders from our community have been at Slush last year and so on. So it's really a good hint. So that's basically it. Thank you, Erdinç. Thanks a lot for being our guest, for sharing your insights. And if you enjoyed the video, don't forget to leave a comment or give us a like, and don't forget to follow us to never miss an episode of To Be Discussed Again.